What is happening, Bulls and Bears? It is Thursday, August 12th, 2022. Back with another dose of you-know-what, economic reality. Let's go ahead and get into it. Now, this is going to be a more serious video, especially towards the middle and towards the end of the video. There's some very serious things I want us all to think about as we continue down this financial, I don't know what to call it. It's a disaster in slow motion that 99.9% of the population has no clue of what's really happening. Everything looks normal on the surface, in the background. You've got debt levels being accumulated at the pace we've never seen before in history. Wow, just massive a debt tsunami is brewing that nobody can see right now. They're on the beach, they're hanging out, the tsunami's coming in. Nobody sees it, nobody hears it, nobody expects it. Well, a small fraction of people, and I think a lot of people here on this channel expect it, and you're preparing for it. Some of us here, and I see your comments, some of us here are more cautionary than others. Some people think that everything's going to be fine, that this thing is just going to get fixed somehow. And we're talking about the debt levels, the cost of living, the struggle that most people are facing right now. The 70% of people living paycheck to paycheck, people just think that's somehow going to be resolved, that maybe wages will be increased, that all these employers are all of a sudden going to go out and give everybody these enormous pay raises to help keep up with the cost of living. That's one kind of theory that I've heard out there. The other is that the cost of living is going to come down. Example, there's going to be a crash in housing prices and rents are going to crash down, and the cost of food and fuel is all going to crash down. In other words, some people expect massive deflation, right? And that is a very rosy view, to expect massive deflation. Now, on one hand, you say deflation, that's terrible. People are going to lose their home equity and the value of their assets is going to drop. The stock market may drop in deflation. That's bad. But if the cost of living comes down, if you don't have to pay as much for everything that you need to survive or to make a living, that's actually a good thing. So it depends on what side of the fence you're on. If you're an investor that has real estate properties, several, then deflation is a bad thing. And also, when you see deflation, that's usually combined with massive job losses, because when prices are dropping, that takes away some of the fuel that creates the boom. For example, when home prices are going up, what are a lot of homeowners doing? They're borrowing against the asset value. They're borrowing against their home, and they're going out and spending that money by refinancing, cash out refinancing. They're spending that in the economy. What does that do? That creates jobs, right? So the boom creates even a bigger boom, and that's why boom and bust cycles are so dangerous, because when the market is booming, when the economy is booming, when it's being artificially stimulated with money creation, spending because of asset prices that have been pushed up abnormally, not naturally, but just by rigging, basically, money creation, lending, debt accumulation, and it's completely non-organic. But then when it turns, the opposite happens. So when rates rise, borrowing and affording that payment becomes more difficult. So now we have the reverse happening. Now it's happening very gradually. Of course, they raise rates very slowly, incrementally. Now, some people think that a 0.75% rate hike or a 1% rate hike is something that's big or massive. It's not. When you look at a chart of interest rates, it is tiny. Back in the 80s, we had a Fed funds rate that was close to 20%. Think about that, close to 20%, right? We're still way below any sort of normal interest rate. But debt is so high right now. So many people are going to be burned and hurt by this higher interest rate environment. That's why I've urged people and cautioned people to be careful, try to save money. And I don't want to say I'm giving advice, because everyone's different. You may be in a market right now where you don't want to save money, where homes are affordable, and it might be a good time to buy a home right now. And I'm serious. In California, I wouldn't think about doing that myself, but in states like Ohio and Indiana, there's many properties, many affordable homes that you could buy right now and rent out for enough to cover your mortgage. In other words, the rent ratio makes sense in some areas, even right now. But most major cities, most major metropolitan areas are not like that. So the point I wanted to make is it's different for everybody. What I say I'm doing may not be good for you. It may be just the opposite. I'm sorry about the bug zapper. I'm doing this video at night and this is bug zapper going off. Now, let's talk about some more recent news. The CPI number is out. Stocks surged partly because of the CPI number was lower than it was the previous month. That's the consumer price index. In other words, what you and I are paying for everyday essentials. The problem is, most of us know the number is fake. It's meaningless. It's highly inaccurate. Some people say it's done on purpose. Other people say the people that put the numbers out really don't know, that they're just dummies and they don't understand how to calculate it. I'll let you decide, what the truth is on that. But the fact is, the number is wrong. The number is wrong. But here's the thing. Just because prices rose slower last month than the month before that, that's being looked at as bullish. That's being looked at as great news. But here's the problem. Prices are still going up. Just because they're not going up as fast doesn't mean it's good news. Right? So let's look at it on the flip side or on the inverse. Let's say you went to the casino and over the week you lost $1,000. You gambled, you played roulette, you played blackjack, you played the slots, and you lost $1,000 over the week. The next week you go in, you play all the same games, and there's two ways to look at it. Maybe you'll do better, or maybe you'll do less bad. So the next week, instead of losing $1,000, you lose $800, right? So you could say, well, that's great. This week I only lost $800 at the casino. Last week I lost $1,000. This is excellent news. I'm not losing as much. Is it excellent news? Or is it just more bad news, just not quite as bad as the week before? There's your answer. This CPI number is more bad news. It's just not as bad as the month before. Prices are still going up. The 70% of people living paycheck to paycheck are going to have even a harder time. Just because prices didn't go up as fast as the prior month doesn't mean it's good news. People that were hurt financially, struggling financially, these people that are running up record levels of credit card debt at the fastest pace that we've ever seen in history on record. That's right, the fastest pace on record. So not only are debt levels at all-time highs, the amount of debt that people are accumulating, the rapidness of that accumulation of that debt is happening at an all-time high record level. So people are going into debt. They're in all-time high record debt, but they're going into further debt at record speed. You see what I'm saying here? And the fact that the cost of living, the CPI number, which is inaccurate, but still when you look at the previous month for the same number, it's not as bad as the previous month. People are saying that's good. The stock market is at a 3-month high now because of that news. How wacky is this? Do you really think there's investors out there saying, oh, prices only went up this much, let's buy stocks, let's go all in? Do you think this is the average investor, average middle class investor on Robinhood going out and going all in on stocks and pushing the stock market higher? Or is it big money buying up stocks right now? And are they suckering more people into the market thinking that this is great financial news? Maybe there will not be a financial downturn like we thought. Maybe we should go all in on stocks. I think that's what's happening. A lot of people are getting the false impression that this economy is not as bad as it really is. And big money's going in there. They're creating a bear market rally, pushing stocks up again to about a 3-month high now. If you look at the S&P 500. And how many other people are going in there? I think it's mostly big money, but a lot of probably just average Robinhood investors are going in. Oh, look at this. The market's going to go back up. Great news. The CPI number is not as bad as the month before. But yet, in the background, things are getting worse. The tsunami is growing larger, and most people do not understand it. All right, next topic. We are headed into some very, very dark financial times. And I'm talking about your money, your personal finance. You will have people coming after your money like never before. Like never before. They're going to come after your money. And I'm not talking about the average, I'm not talking about a salesperson trying to sell you something. Of course, You go into a car lot, they're going to try to take your money. That's their job. I'm not talking about that. I'm talking about people trying to take your money, people that can look into your life and see exactly what you have in your account. They're going to try to take your money. And they are organizing right now to come after you and your money. I'm talking about the average middle class person. Of course, they're going to tell you that they're going after the rich, but no, they're going to come after you, the average working person. They're going to look at your assets. They're going to look at money that you've made, and they're coming after you. So get ready. And this is going to be a tsunami like we've never seen before. This is today's video, folks. A little bit more serious, but this is really what's happening. I probably should do more serious videos like this every day. It's just hard to get into that mindset. You know, even I sometimes don't tell you the hard truth like I really should. I mean, the reality is that things are going to get really ugly, but it's no fun talking about it, right? People want to hear. That's why 99.9% of the people believe the official numbers, and they think the economy is turning around right now. They believe that this is the best economy ever, and it's just mind-blowing, people. Keep stacking, because at the end of this financial Armageddon, real money will be back, and I'm talking about silver, folks. I got a link down below. Now is a excellent time to buy silver. Drop below $20. We're right around the $20 mark right now, depending on which broker you look at. I got a link down below. SD Bullion. Always had excellent service from them. Been a buyer from them for almost 5 years now. Never a problem. Never a missed order. Shipping on time. Never a problem. Link down below. You help out this channel when you buy from that link. And when silver ran up to $27, I told you right here on this channel, okay, I'm easing back on my purchase. You wait for the drop. That's when you go in more heavy-handed. And that's what I do. I'm not saying that you should do that, because you might go out and buy silver, and then that was your last bit of savings. Now you can't pay your light bill. That's why I don't give financial advice. Might not be a good time for you to buy silver. But if you have some to invest, maybe put in 5 or 10% of what you have on the side in silver right now. It's a great time, in my opinion. Do your own due diligence. Do your own research. Thanks, everybody, for being here. Big love. Bye for now. Keep stacking. Peace.